While you're reading this disclaimer, don't forget to subscribe, tap that like button, and do your best impression of a chicken laying an egg. Go. What is up, trading kings and queens? I hope you're doing well. Super excited to go over this with you today because this is a very, very simple strategy using my King's Cloud indicator, which is currently in beta. Hopefully, I'll be releasing this soon. And normally, I'm going for a very fixed 1-to-3 risk reward ratio. But you can see by these, this is a 4 and this is a 4.5. This is actually following my trading rules on a 1-to-3. So that being said, I will go over all three of these trades and why I got in and out within them as far as that goes. But again, hopefully again, you watch the income disclaimer I posted before this. Most traders lose money, right? Like 97% of them. So if you're like me and you're a little nuts and you want to become a trader, I want to at least show you the strategies that are working the best for me, right? So again, but there's no guarantees of income. And, again, read all those disclaimers and stuff. So that being said, the first thing I just want to cover real quick is the reason why I drew this yellow line here. As you can see here, I've got these vertical colored areas, green, blue, red, green, blue, red. These are the different trading sessions. Okay, so we've got the U.S. session, the Asian session, and then the London session. Then it comes back and it repeats, obviously, because the world goes round. It's not flat like some people think. So in this particular trading session, the Asian trading session, there was a lot of resistance here. The price didn't move. It wasn't really going anywhere. So I kind of knew that this was going to be more than likely a resistance level, potentially. So if it got up to this area, I didn't really want to mess with it. I could have, moved my stop loss and, whatever else. But I didn't really want to screw with it. I wanted to get out of the trades, which is why I had notated that. That being said, this King Cloud indicator is pretty much as easy as it gets. You can see here, we've got this red cloud movement and kind of goes down, goes down. Then we see a green king of diamonds is what I like to call it, is my king of diamonds. And then the green cloud, so it was showing that momentum down in a downward direction stopped and halted and started going in the upward direction with these breaks of structure and the buying volume and such. But then as soon as the market opened, it switched. But here's the thing. I should be, in this case, in this small area, looking for only sells. Only shorts. The problem is I saw the price dip way down and it went in this big red area here. Now, if you're, I just want to teach on my indicator strategy for this particular video, but this red area is a support area where the markets will typically the institutions will heavily buy this particular symbol, this particular trading instrument, right? So you can see it came down. Anybody's stop losses here, it took out and immediately shot up. So basically, the institutions came in right when the green box here started, when the session opened. You can see it says 9:30 a.m. at the bottom of the screen there. So it's 9:30 Eastern. Markets came in, swooped down, took out everybody's stop losses, and then boom, everything went into buy mode. Right. And I could tell that just based upon how quickly this momentum went down and then touched this box and went immediately up. So I knew when the price entered this box that we were going to be more than likely seeing some heavy buying. So I didn't buy right away. I didn't buy here. I didn't buy here. I waited until that momentum was up. I waited until this red candle pulled back a little bit, but we immediately got more buyers in. So I knew that more buyers were coming in heavily. Now, most of the time, when I'm in the time of day that I actually want to trade, which is at least, about an hour after open. You can see here, open was 9:30. This is 10:30 right here. And you can see actually was in a trade 3 minutes earlier than that, 4 minutes earlier than that, 10:26, right? Usually, in that case, my stop is 150 ticks, 150 points, right? Here, it's double that. Why? Because I know the volatility of the market is so much at the open that I'm basically going to have a bigger stop loss, which means that I'm buying less contracts, so I'm still only risking the same dollar amount. So again, I know I just said a lot right there. If I'm going to only risk $100, let's say per trade, I know how many contracts I have to buy when my stop loss is 150 points. If I'm only going to risk the same $100, but my stop loss is going to be as big, twice as big, I'm buying half the number of futures contracts. Now, if that doesn't make sense, don't worry about it. It's basically the same as like, okay, instead of 8 quarters make $2, I'm gonna get 20 dimes. Is gonna make $2, right? The cool thing about TradingView and me, I integrate with Tradovate as the broker that I suggest and use. I can literally select how much I want to risk per trade, and then just click a button, and it automatically will figure that out for me based upon my stop loss and this and that. Okay, so that being said. Excellent. So that's why I got into the trade. Now you can see that this actually went to a risk reward ratio of 4.33. Normally I'm only going for a +3. This ended up being a +4 because I figured at the top here, remember, this was an area of consolidation. The price might come way back down and retest these lower prices here where there was a block, a red order block that got mitigated here. Again, I'm getting sidetracked. I'm trying to just teach on my indicator strategy, but this one didn't use just the indicator strategy. So I'm kind of doubling up here. So the price consolidated. This did make a lower low, right? I'm sorry, a lower low than here, but it did not break this lower low here. Okay. So after this shot back up, I moved my stop loss from break even to here. So I knew I was going to get at least a 0.7 out of this one way or another. I could have gotten out at a +3 right here, but I didn't. I was like, there's still a lot of momentum going up. It just took out some people's stop losses that had moved them underneath here, right? Let's see if this goes up. It didn't go up and beat this high, but I'm still in this zone right here. Let me see if I can draw. I'm still in this zone right here. Oops. This zone right here. And because it's in consolidation, we're in the chop right there. I'm like, all right, well, I'm either going to make $700 if again, I usually trade $1,000 per trade. Again, not beginner. Don't do that. So in that case, I'm like, if I make 700, still a good day. If I end up making 3K up here, cool. But I have a feeling because we're coming off of this big red order block, a lot of buyers are still coming in. Let's see how high we can go. Right. So I let it run. And not only did I let it run, I followed my trading rules, which is, again, I'm in this green cloud for my indicator. This green line right here is my royal bloodline. Again, corny names for king-related terms. As soon as I saw a big, fat green candle right here, again, it didn't quite close, but it was 80, 90% filled. I figured that the momentum was going to go and at least retest the top of these prices. So if I get in here, if it starts to reject, I can get out immediately, or whatever, right? So I was already in this trade. I added on another trade. Now, again, you got to be careful with this. And if you're doing what I suggest, again, not financial advice, this is just what I do. I trade 1 or 2% per trade. I don't like having multiple trades open typically, but in this case, I was like, we're showing some good momentum back up. Let's see if it's going to test or retest here. And it tested a higher price and continued on at 1, right? So now I'm not wanting to get greedy. I'm not wanting to just let this run forever. And you can see I could have gotten out up here in these highs. I had already gotten out. I got out with a +4 and a +4.5. So again, take off a little bit for commissions. We're still talking about $8,500 in the span of this trade start. Well, I was obviously looking at the markets from here to here. So that's an hour and 16 minutes. The market was open, 8.5K, or $850, whatever, depending upon how much you're risking per trade, right? Again, no guarantees that you're going to ever make that kind of money, that kind of thing. And I was out of the trade. And I was like, you know what? I want to wait for another good push. So I could have gotten in the trade here. I happened to maybe miss it, but and this actually would have been either a loss or a break even. Seeing this big wick here, I would have waited. I wanted to see the price give a nice big pullback, right? So basically what ended up happening was I went in, nope, don't do that. I went in and I wanted to wait until there was a bigger pullback like this. There was a pullback here. This pullback right here retested this price area, right? And because of that, it started to come back up again. As soon as it started to kind of get out of this trend right here and break up above, I was like, you know what? It's a bit of a gamble. It's not a perfect trade. I could have waited until here to get in. Let me just mouse over that candle right there with a nice solid green. Hopefully you guys can see that. Let me zoom in even more. This solid green candle, again, my cursor's below it so you can actually see it. That solid green candle right there would have been the perfect one to get in at, and this trade would have still worked, by the way. Right there, still a 1 to 3. This is the trade that I did, and this is the trade that I typically look for. I'm in a green cloud area. I've already bounced off of a big order block, knowing that there's momentum going in this area. This trend down got broken for this little breakout right here. It continued up, and I was out at a +3. Well, Adam, you could have gotten out here. I don't care. I'm taking the win and saying I just made another 3, a +3 right here. So this is, again, heck of a day. I stopped trading at this point. I could have easily said, oh, well, I'm gonna wait. We're not seeing much bigger highs. I tested again, didn't do well. I could set the indicator to tell me, hey, alert, this changed over to a red king of diamonds. Maybe start paying attention again. Could have maybe gotten in here for a trade. Could have gotten in here for a trade. Could have gotten in right here on a trade. That probably would have been a loss or break even. Usually, again, when you guys make money in the markets early and you see a lot of movement, there's a lot of chop in here. There wasn't as much opportunity to make money. If you've already made your money, feel free, even this first trade, I might not have added on a second one and just set my +3 and been, walked away and been fine. You know what I mean? So don't get greedy in the markets. Don't overtrade. But when there's a trade set up, attack it. As far as that goes. So if you guys like this video and you want to see some more, go ahead, watch the rest of the playlist that this is in. Comment down below what you like the most and what are the questions you might have about this, as well as subscribe. And we'll see you guys in the next video. Appreciate y'all.